Hi everyone, this is Manoj here, and this video is about Hindustan Aeronautics Limited, HAL as we call it. Now, this is a stock which was the darling of the stock market for a very long time. And now what we're seeing is this is a monthly chart that you see on your screen. And we see that right from the month of June, July, August, September, October, barring November, December, Jan, and even now Feb, we are consistently falling on this stock to an extent that we hit a high of 5,684, somewhere around 5,700. And today we are sitting at 3,500. That's a drop of 2,200 rupees from the top, which is significantly close to 40% of erosion in its value right from the top. Now, uh, I hold some positions in this, and I'm intrigued as to why it has fallen so much and what is from where we can see a reversal on this stock to again regain its great trajectory that it started in the month of October 2023, which took it to a crazy height of almost a journey of 3,800 points in a matter of 243 days. That's close to about 8 months. In 8 months, we saw a rise of 200% in this stock. It doubled its value in 8 months. And in the subsequent 8 months, we have fallen by 50% of the value. So this is a retracement of 50%, which is not uncommon, which is what usually happens in any cycle of the market. You see falls of 50% if it's a stock which will follow its normal course. To illustrate exactly what we've been seeing, what I'm going to do is I'm going to try and give you a scenario using the fib retracement tool. So here's the fib retracement tool. And what we see here is that if we consider this as the initiation of your journey and the peak as the 0 point, we've seen that we've retraced back into the area between the 650 and the 60 percent retracement zone. So we're already below the 50% level, and we are going down and now closing in on that 61% ratio. Now, this is the golden zone where most of the replacements happen. Most of the retracements back to the top happen. Are we going to see this in this particular stock? Is something that we want to debate in this video. I'm not looking at any kind of fundamentals. I'm only looking at technicals and using my fair value guide as something that I use to assess what is the market structure telling me if I use the fair value guide as something that should give me a structural analysis of what to expect in this market. So on the monthly chart, you see that we are now into a fair value, a bullish fair value gap, which was created by the gap between this candle of the month of March and this candle of the month of May. There was an expansion move in the month of April, and there was a further expansion move in the month of May, which was a major expansion. And now we are retracing back into this area of the breakaway gap that was created by the month of April. Before the month of April, if we consider the month of February 23, February 24, March 24, and April 24, we formed a seemingly, innocuous fair value gap, which is a fair value gap, which is now where the retracement is beginning to come into. And this particular level becomes interesting because this coincides with the 61.3% move, 61.3% retracement that we saw on the Fibonacci. And this becomes an area from where we could now expect some kind of a reversal back towards the top of the chart, towards the all-time high on this stock. Now, in the long-term vision, the entire focus of the Indian aviation industry depends on this stock. So there's a lot to stake in this particular company, and there is no dearth of orders for this company because the defense is with the Made in India program and defense wanting to build an armada of airplanes for the country, for the for what do you call the I forget the name, for the aviation industry of the military. So it's the Air Force. I'm sorry, Air Force is the right word. So with a lot of demand from the Air Force, there's a no-brainer that this stock should do well. So why is it falling? The one reason is that, yes, technically the stock should fall after such a huge build-up, and there's some profit booking that is coming into force. And there could be some more fundamental reasons: not getting the right engines, not delays in the delivery of planes to the Air Force and stuff like that, which could also be one of the reasons why the stock did not stay at the valuations that it initially promised. But looking at it only from the technical chart, we are now approaching that 61% level, which is something which can give us a hope of a reversal from. Now let us go down to the weekly and see what does the weekly tell us. So if you see in the weekly scenario, we are now approaching a level which previously acted as some kind of a base formation. So in the last journey, the last time the stock took its journey up, it created a small base formation in this area. So I will call this as a base formation area. This exactly in the place that we have marked as that fair value gap on the monthly, which is the box that we have. And this is exactly where the base formation happened. If you see, there was a move here which acted like some kind of a trap move where the institutions trapped people into this particular candle, created a trap situation where people at that point could have thought that it could be some kind of a reversal. But as soon as that month ended, the lows of that particular month's candle, the week's candle, which was the 11th of March, was swept by this candle of the 18th March, and that was the one that gave us the all-time high. So this area becomes a very important area, and I expect some kind of reversals to start happening from this area between 33.70 and 31.55. So this is an area of 200 points in which I expect some kind of a reversal to start happening. So what's the trajectory that we would want to see? Here is we would like to see a trajectory which would take us down into this area, possibly just move up, give us some kind of a trap move, and then move back up. And this should then take us to this level as our first destination, which is what we can aim for. So in effect, what we are aiming for is a move. If we buy something somewhere around the proximal line of this demand zone, or maybe somewhere in the middle, or we can buy in lots to average, this could give us a bounce of 1,000 points, which looks very, very probable at this point of time. And we could also have some kind of a risk reward ratio on this trade, which would look something like this. Something like this. So we could have a trade which could give us a 1:2 scenario in terms of the risk reward. In fact, it's 1:2.5. So I would initiate my buy somewhere around 33,000, 3,310 is what I would do. I would place my stop loss at about 28 or 29, 28.94, 2,900, and target this move to high of 4,300 is the trade that is seemingly beginning to form for me on this stock. Now, it remains to be seen whether this happens or no. But yes, this is the trigger that I would aim to get into the stock. Now, how would I get into this stock? If you see, I have given you this trajectory that I expect from the move. I'm going to make it blue because it's a bullish move. This is what I expect from this move. Now, let's go down and drill deeper into a 4-hour chart and see what the charts are telling me on the 4-hour time frame. So this is what it tells me on the 4-hour time frame. If you see, there are multiple unmitigated. In fact, this one is mitigated, this one is not mitigated, and the last one. So if we have to see whether the particular fair value gap that we see has been mitigated or not. So this one looks mitigated, this one also looks mitigated, and this one is the one that remains to be unmitigated. This is a fair value gap. Now, generally, we should expect that this was a base formation here, and this would be a good order block sign to get into the trade. So let's see what this corresponds to in terms of where we are placing our entries and how. Okay, so this will coincide very close to a probable entry zone, which would be around 3100, 3200 odd. And we are trying to place our entries at somewhere around 3300. So we could lower this down to approximately this level, which would then, because sometimes the price will bounce off before it hits the exact level. And this is where we could target our entry. That would be 3250, because in the scheme of things, if you're looking at a 1,000-point run, you do not want to, you can risk a 100-point less by being not very precise. So what you can do is you can partially enter here and take the other partials somewhere here. That would give you a good average of somewhere around 3200 on this trade. Now, where would we like to see, what is the formation we would like to see when we would, what is the confirmation we want to see before we enter this move? So I'm going to give you an idea as to how the confirmation happens. Let's look at something that transpired the last time around the move happened and learn something from there. So let us see what happened in the last scenario. So in the last scenario, this seemed like a pretty good, resistance level, which then began to act like support. Now here, the story is a little different, because here what happened was that we took a sweep of these levels and we started to move higher. As we moved higher, if we go down to a lower time frame, let's say the 30-minute, and let's see what's happening in that 30-minute time frame and get an idea as to how we should build a scenario to take our longs. So what will happen generally is after the stock climbs, reverses down, reverses below a particular level, traps traders, and then these are the traders who are on an intraday journey, traps these traders and takes the stock higher. This propels the stop loss of these people propels the stock. Now, once you see that you have formed a fair value gap after the move, which is in most cases negating the fair value gap that was created on the bearish side, which we call as the manipulation. We call it, let's see what I can do with my, we call it, this is what we call as the manipulation gap, manipulation FVG. And this is a bearish FVG. So we want to mark it as red. And the resultant move on the other side with a bullish FVG. This is negating this FVG. So now we have a bullish move, and a retest of that is the best area to enter from. Now, if you see that it is not retested and it was moved forward, what you can do is the next time a fair value gap is formed on the time frame of your choice, in this case, I have used the 30-minute. You see this particular fair value gap, right? It got tested once, and if you could not enter here, you could enter on the next fair value gap, and this would have given you a beautiful 1:2 trade, 1 risk reward to a 2 risk reward trade from here, which would have given you a beautiful how many points? Roughly about 160 points. Oh, it's 160 points. Let us see how much it is. Yeah, it could be roughly about 160 points, I guess. There you go. So this 160 points was achieved in just 3 days. Now, you can obviously, this would be a trade that you would take, but we want to extend it to 1,000 points. So we will obviously, the entry is meant to give you a precise entry, but overall, you could shift yourself out to a 4-hour chart and then take the trade based on that assessment. You can, keep on riding the move by keeping your stop losses under protected lows. That's what would be the strategy that I would use. So this is the scenario that is building up for us on the HAL chart, and this is the way I would, want to trade this stock. We are closing in on we are coming into a very good value on this particular stock, very close to its last base formation, and that's where we want to enter back into this stock, and we can ride it to 1,000 points. And in fact, once this particular move is established, probably the resistance is going to be somewhere in this area as I see it, which is about 4,400. I'm closing in on 4,300 because I want to book my profits and I cannot always target the top. But these are the two levels that could give me, if I'm in multiple quantities, I can start unloading as I keep on moving higher. And this could be the next resistance point. And over a period of time, I think we will regain back to its all-time high, which is this level, which will be the ultimate direction, ultimate destination for the stock. If you are somebody who has the patience to hold it for a longer time, once you see this reversal, in a matter of 6 to 8 months, we would go back up to 55, 5,600 on this stock. So that should be a great plan to trade this stock because fundamentally it's a no-brainer. It's just that we have taken a technical fall at this point of time, and we could be heading higher after the area is tested, after the last breakout area is tested. In the bigger scheme of things, if you look at the weekly chart, this is on the monthly chart a 50% retracement into the 50 to 60% retracement on the weekly chart into a good area. And then on the daily, we already have probably broken down our entries using the fair value gap concept to get us the best entry point once it is in that golden zone of reversals based on the Fibonacci. So this is how I would, actually average in HAL. I'm a long-term player in HAL, and I'm holding some stocks at this level. So at 4,000, I got in with some quantity, and now I want to average it down somewhere around this 3,100, 3,200 level and ride this journey back to the top. It may take me a year or a 6 month or an 8 month period, or probably even a year, but I'm sure that we are heading higher once this retracement happens and the profit booking is over, and we are back into some area of better pricing, where again it becomes attractive for people to get into it. So that's my plan for Hindustan Aeronautics. If you liked it, give me a like on this video. If you want to learn more about how I'm devising these levels and I'm reading my charts, you can join my course and I will help you through the reading of the charts. I use liquidity zones and institutional traps as my basis on which I read my charts and prepare my setups, which is helping me a lot in returning profits from the market. It's a challenging environment right now, but you learn in challenging periods. You don't apply too much money in the challenging period, don't trade too much in the challenging period, but you learn the techniques that can help you when the market is starting to boom again. So that's the gist of what I do. Please share this video with people who you think would love to know the nitty-gritties of using technical analysis to score in the markets. And I would want an appreciation and some kind of a encouragement from your end with likes and comments so that I keep coming back with videos like these. You can also comment if you require me to assess any stocks that you hold and you are looking to see what is the next entry point or what is the next place where you would want to rupee average that particular stock in which you are for the long term but has taken a beating because of the current market downtrend. That's it for this video. Thank you for spending your time with me and look forward to engaging with you in the next video. Thanks a lot.